This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe Rabil with Invest Like a Pro. We're going to do a update for the market, and I'm going to talk about the S&P, the QQQ, and the Russell 2000. I will give an update on all the market conditions as well. As always, please hit that like button. Really helps me with the YouTube algorithm. So I really appreciate that. And also, if you're not a subscriber, go ahead and hit the subscribe button and make sure you hit the bell to get notifications. Let's get straight into the charts. And I've got a little bit different setup today. I put the market conditions on top of this chart over here. And I'm using TradingView for the video today. So anyway, if we look at what I've done here, I've got the trend and momentum again, volatility, overbought, oversold, and the sentiment. So no change there. I've got the plus mark showing which time frames, monthly, weekly, daily, hourly, on a trend basis, and then monthly, weekly, daily, hourly on a momentum basis. I'm going to go into that more in depth in a minute. The volatility is flat now. So let's just look at this chart over here. You can see that, again, we had this declining ADX phase here, which is the period where the market was basically just climbing, making higher highs and higher lows without a lot of fanfare. There wasn't a lot of volatility associated with it. And those are the best conditions, really. And then we started to see a little bit of a bump, and we've had sort of this choppy action somewhat. But most recently, once we hit this low, we've pretty much been rallying again with pretty low volatility, because this has now dropped, and it's dropped underneath the 18 MA. So that line is flat. So I have it at neutral right now as being below a flat MA. And we'll just have to keep an eye out. If this rolls over, if this moving average were to roll over and the ATR would continue to drop, then the condition would turn back to positive, and that would probably be a pretty good sign in the near term. The overbought, oversold oscillator I have here at 69.85 currently for RSI 5. It is potentially forming another divergence here, because we're at a new high in price. And this is making a lower high. Now, if we were to continue to move higher here, it's very possible we'd see the RSI end up confirming. So we need some sign that the price is turning down to sort of confirm a divergence. And then in terms of sentiment, we dropped down to 40. It's kind of, there's been a little bit of a drop in the number of bulls. Not significant, but it's still in this, 40 to 50 range. But, I don't consider it to be all that scary right now. It's a condition that I would consider to be, it is a negative when I'm doing the math, or, if I were calculating out, it would be considered a negative. But again, I think we're going to need to see some sign, probably need to see some sign of a trend break or something like that to really get this to kick in and have some more meaning. So let's go straight into the trends here. Again, I have my 4 time frames up. There hasn't been a significant change in the monthly in quite some time. The only thing is that and it's something that I think we always want to look at. You look at the 18 and the 40, and we can see that they're both rising. You want to look at the distance between them, and you want to look at the rate of ascent. Are they rallying? Are they moving up at about the same rate? And that continues to be the case right now. If we were to continue to push higher from this point without a pullback, this 18 is going to start moving up at a faster rate than the 40, just based on how they're calculated. And that would probably put it into a little bit more of a dangerous camp. Right now, I really wouldn't classify it that way. But just something to be on the lookout for. Weekly continues to be in control on the S&P chart. Good momentum conditions based on the MACD and the ADX. And again, 18 is above the 40, both lines rising, and they look almost parallel still. And we're not really that far away from the 18 week. So I would consider that to be pretty good shape. When I look at the daily price chart, so this is something that I thought was interesting. I thought it was worth talking about. So
We haven't had confirmation on a momentum basis using the indicators. But what we have had, and something that I should have been pointing out along the way, and part of the reason why when I said last week that I wasn't looking for any kind of a crazy drop or anything, is that the 18 is still above the 40 and both lines are rising. We haven't had any kind of a real rollover on this time frame yet. I was sort of thinking that when this came down to the 40, we'd get a rally up and a failure at the 18, and the 18 would actually start to roll. But that never happened. We got down and then it just popped right back above. So if you think about it, if you were to take the price off and you just looked at what the moving averages are doing, it's actually in a pretty strong condition. 18 above the 40 and they're rising almost parallel. So I think we want to keep an eye on that in addition to the indicators. I'm not saying to dismiss the indicators, but using these two moving averages as a buddy system can be very, very useful in that way. Looking at the hourly chart, we have gone somewhat flat here. 18 is now flat and price is kind of wiggling back on forth above and below it. We had a little bit of momentum divergence on this time frame. If you look at what happened on this last peak here, MACD did not confirm. But what's been taking place since that time has been more of a sideways situation rather than some kind of a any kind of a break of the 40 or any kind of a real negative price action. And also, I want to make sure I point out the ADX was very strong into that rally. So this is not the type of divergence that really scares me. It's more of a pause in the trend, a pullback. It just got a little overheated. So let's go ahead and switch over to the QQQ. Same thing taking place on the monthly chart. We've gotten this long, so it really started to kick in 2011. And we started to get a move up and then it paused a little bit. And then we had a really nice run, 213, 214, and then took a breather here and then had another nice run. And then we've pulled back. So, I mean, you start to look at this on a bigger picture. Yeah, it's getting up there. I mean, you have to accept that this is getting up there. The problem I have with calling a top in the QQQ is, yeah, it's overbought, but you could have said it was overbought numerous times along the way, and all it's done is pause and go again. We're looking for one of two things to take place. Either momentum divergence to kick in and give us some kind of a confirmed signal of a peak, or a climax pattern where we get some kind of a blow-off move. And neither one of those are in place right now. From what I can see on the monthly chart, it's a little bit more dangerous, obviously, because how it's been running. But one thing to keep in mind, if we are going to end on a climax, there's a lot more upside coming. And I know I've said that the last few weeks, so I wanted to make sure you understood why I was saying that. Think about it this way. We're either going to top on divergence, which we don't have in place right now, or we're going to end on a climax. We don't have that either. So we want to be on the lookout for those every single week. That's why we do it every week. But right now, I don't see it. The weekly chart, again, I think is in pretty good shape. ADX is really strong. MACD is trying to confirm, but again, more importantly, look at the 18 and the 40, and they're rising at about the same rate, and we're not extended. So those are pretty good conditions. Now, again, I think if we go and look at the daily chart, again, the 18 is above the 40. They're rising at about the same rate. We had a little bit of a dip here. The momentum conditions, at least on a MACD basis, are a little bit better. There's just too much volatility and too many down bars. So let me just explain why this ADX can't get going, just so you understand. Every time we get a couple of big down days like this, or on this day, or like that, or a couple more here, or then a couple big ones here, you're basically creating negative DI pops that are causing the DI to go up, and that's creating volatility, and it's not allowing for separation between the green and the red lines. And keep in mind, the only way for this blue line to really go up and continue is for these lines to separate. And we just can't get that to happen despite the fact that price is making higher highs and higher lows. It's doing it in sort of a choppy way. And so I wanted to make sure I covered that just so you understand why sometimes this is happening. And a lot of it just has to do with the fact that volatility plays a role. And again, when there's a lot of volatility, this indicator will lag. So I like to look at price. I like to look at the moving average. And especially when I say price, I'm talking about the price bars. Normally I will look at volume. I don't have enough room to put that on here to make it look good. So I just take that out. But the reality is that that is important as well. But and then the hourly chart, again, very similar to the S&P, not a big change here. Let's go ahead and switch over to the Russell. This is a very different pattern from the other two, in my opinion, because if you look at what happened here, you spent really the better part of the last couple of years working this. Let's take a closer look at the monthly chart, because what happened, we spent this time working down to the downside, and look at what MACD was doing. It was working its way back down to the zero area, just like it did here, only a little bit more accentuated just because of how violent the decline was. But the fact of the matter is we just recently had a MACD cross right around the zero line and cross back above the signal and the zero. So we're getting this huge breakout and follow through. And it's actually gotten pretty extended in the short term, but this is an initial thrust. This isn't extended. I mean, if we compare that to what happened in the Qs, which has been going up forever, this has been doing nothing for a couple years. So to me, this is significantly different. And the momentum confirmation on all the time frames, especially weekly, on the daily, and then on an hourly basis, they're showing that this is really where the power in the market is right now. This up leg has had a lot of juice. The ADX line is up around 46. If you notice, and I want to take a quicker look at this. So if you notice the Russell, it's had some pullbacks, but if you notice the ADX has held 25 throughout these little dips. And also you don't have the same kind of choppy action. You've had a couple of orderly pullbacks, but not the same kind of choppy action that you've had in the S&P and the QQQ. And it's the reason why this has really been the area where you've wanted to focus your efforts. And then again, we reached a really high level on the ADX, got up on to like 80 on the hourly chart. So again, I'm not looking for any kind of major decline right now. I think we're going through a consolidation. It got a little overdone. I do want to point one more thing out about the Russell. So this is the Russell going back. I drew in this trend line. I've had this trend line in for a while. I pointed this out on this channel when this was breaking and this was starting to turn up. And we've had a huge run, a significant run on a relative basis. This gray line is the Russell 2000 relative to the S&P, and we've had a big move. Now, I'm sort of the opinion at some point in here we are going to get some kind of a retracement against the S&P. That means that on a relative basis to the S&P, we're probably going to get some kind of a pullback or something like that. But we haven't even had one of those since the 18 turned up. Actually, I'm sorry, this is a 30 MA on the relative strength, but the point is the same. We haven't had a pullback yet, and we have a very strong condition in place in these stocks. I would continue to keep an eye out for stocks between 1 and 5 billion that are showing good characteristics, the stuff that we like to look at, the breakout characteristics and pullback characteristics. I think that's where a lot of the most attractive patterns are. Anyway, take care, and we'll see you next time.